technical analysis of the Dow. Hi, it's Charlie giving you Saturday's video. I hope you're very well. Do check out, by the way, our sponsor Tickmill in the description box below today's video. Now, the Dow here, I've just got a CFD chart of the Dow. I could put the futures up or the cash market, but I quite like just having the continuous sort of contracts here. And so let's have a little look at it. Now, the first thing that I would suggest is that when it comes to technical analysis or any approach, whether you're a macro trader, sentiment trader, every trader is going to see different things when they're looking at a chart or absorbing data from the macro economy as well, or even sentiment trade data. So the point of trading is that you form a view from your analysis, and then you try and stick to that view. And if you switch around all the time, that's when traders don't make money. So I'm going to give you some information in today's video which you can form a view or as to whether you prefer the long side of the market or the downside of the market. It's not my job on this video to necessarily give you my view because otherwise that may be influencing you. So let's have a little look at the pros and the cons without taking into consideration any of the sentiment that's going on out there in the market and has been over the last couple of months or the macro. Let's just have a look at the technicals here. Now, firstly, if I zoom out a little bit, you can really get a sense of this price action that we've had over this past year or so, where I'm just trying to bring my pen up off screen. It won't let me do it. So all the way through all of this. So we bumped our head against that, the Dow. Then we've had this really nice breakout. It's done a typical pullback to retest the level and bounced. I'll zoom in on this in a minute. But as I speak, so to speak, in recent sessions, it started to pull back off again. So we're going to address that in just a moment. As you can see, also on my chart, I've got a nice trend line, which many of you will have, which is rising there from pretty much last year's lows there. We've got a lovely steep trend line which is rising here, and then that's an old trend line that I probably don't need on this chart anymore. Actually, that one's done, so I'll get rid of that. Let's do that. Okay, so I've just got two on here. Of course, you can put all sorts of trend line channels on your chart. I'm just keeping it basic for now. So let's just zoom in a little bit so we can see this a little bit more of this price action that we've had of late. So we've had this breakout and pullback. So from a technical perspective at the moment, there's certainly an argument that the Dow has done this breakout, pullback, and successfully bounced. Okay, it's rolled back off to retest this trend line again, but overall it's still in a reasonable area. You might argue, even if it comes down a little bit more, it's still in a reasonable zone, because we can see historically, if I go back to the weekly time frame here, how much this horizontal zone, and I call it a zone because there's spikes through it, but it's how much that this zone has been tested, both from below, from above back in 21 and 22, and again from above right now. So it's obviously an important level. Now, like I've already said, sometimes price will poke its head for it, like back here and over here, before then finally getting a proper breakout up here. And likewise, price could penetrate below it a little bit, but not do anything too meaningful, and then still end up coming up over here. So this is just food for thought at the moment. Then, so from a bullish case, if you're bullish the stock markets, there's certainly from a technical perspective a bullish argument that you could create and form a trading plan around that based on what the price does over the coming sessions and what you need it to do. So what about the bearish case? Now, the bearish case for the Dow starts to get a bit interesting because of this trend line for starters. It's a nice trend line going all the way back, as you can see, to October of last year. But it's a nice 45-degree angle, and so it's relatively steep. And steep trend lines don't always last. Now, it doesn't mean to say even if we're breaking this trend line at the moment, of course we have to allow for just a little bit of overshoot, but if we were to break a bit more, it doesn't mean to say it has to come all the way, of course, down. But I often say that trend lines will sometimes just get disrupted a bit, so it'll come down to a given zone and then that will be it. But nevertheless, if you're a bear, then we are literally in the process at the moment of a trend line break. We got a close below that trend line yesterday. I'm recording this actually Thursday evening, even though this video doesn't go out till Saturday. So we got the close yesterday and it's hovering around it today. So if you're a bear, depending on how you go about these things, you're either going to have already shorted based on the close there below the trend line, or maybe you'd say, right, okay, well, let's wait and see if it can break down that little bit further here. The other thing for the bears is there a head and shoulders pattern forming here? If that was a left shoulder and forming a right shoulder here, with the neckline would then be through here. So is there a trend, is there a head and shoulders? And the reason I'm saying is there because I'm not brilliant with head and shoulders. That head and shoulders can be really messy. I can see it, but they're not always the cleanest. And the thing is with head and shoulders patterns, yes, enough of the time they will work out, but there's plenty of the time that they don't. So it's a 50-50 call really with head and shoulders patterns. Nevertheless, there is one building there, and I know that we've got one building because if I go out to some of the other markets like the no, not the Nasdaq, the S&P here, then there's a case to be made for a head and shoulders potentially in development for the S&P there as well. So coming back to the Dow, some food for thought there for the bears. So we could have a head and shoulders in development here at the moment, haven't breached the neckline yet, and this trend line which has broken but only minimally so far. Now for the bulls, like I've said, a bull we could very easily, price could very easily, as I've already said, just breach a little bit through here, but overall be holding. Maybe it doesn't, maybe it holds right here and it doesn't go any lower. So there's certainly a bullish case overall, but I know how scrappy markets can be, and they might overshoot a little bit and come down if they do come down before ultimately even turning back up again. Because this level, this line in the sand, when we look at the Dow here, we've only in relative terms just gotten above it just in the past couple of months, having traded below it through from here, so like early to 2022, where it materially broke down right away until sort of June, July time this year before it broke out. So there is certainly a technical case that, from a technical perspective, that this level could now be overall the line in the sand, so to speak, whereby it carries on forming a base around that before potentially even starting to go higher again. So all of a sudden you can see how easy it is to create an argument whether you're a bull or a bear. It's not my job to influence you. It's just I thought it'd be interesting just to have a look at the chart here with nothing else on it apart from two trend lines, and how easy it is to see a couple of patterns, and some people will say I'm really bullish on this market, and others might say they're actually really bearish on this market. But what's interesting is that whatever way you are looking at it, whether you're a bear or you're a bull, this is a fascinating chart. There is a line in the sand here, and if you're a bear and it comes down and you sell it and then it's a false break and it comes up, so be it. Doesn't matter. We're all going to be wrong 50% of the time anyway. If you're a bull and you're buying it, right now or over the coming sessions, and then it rolls over and breaks, so be it. You can't always be right, and it rolls over. But the nice thing is, this is a really good, important, what I would call a bit of an inflection point at the moment. Are we about to do a more material pullback here for the Dow, considering the lows that were made. Forget that. The lows that were made, there we go, last October. So is this, are we due a larger retracement within what's gone on? Or is this just literally just that, a retracement before we go higher? I shall leave that choice up to you, but this is a fascinating chart right now.